UDC Finance Chief Executive Wayne Percival joins us now. Thanks for joining us, Wayne. Why have you made this significant acquisition?
Morning, Jono. Look, I guess some people may be aware UDC was sold 2 years ago from ANZ Group to Shinsei Bank in Japan. Obviously, part of the purchase for them was about growth and looking at other opportunities in New Zealand for further growth. And I guess, we're a big part of what we do is wholesale and retail motor vehicle financing. And, the sort of a key piece, I guess, in growth was the opportunity around the Guildtrap Group's business, European Financial Services.
And why that asset in particular?
Well, I think, it's pretty well, one of the sort of longest, well-respected groups. If you look at wholesale and retail importation of motor vehicles in New Zealand, the brands that they're involved with and distribute, not only in Auckland, but right across the country, was quite key in what we saw in, I guess, filling quite a large gap, probably at the more premium end of the market that maybe we hadn't been quite so exposed to.
And what does this mean for both businesses, your business and Guildtrap Group?
Yeah, as I say, I think we're very large in the business anyway, and like I say, it was about growth, moving more into the premium end of the market. We've got scale, we've got size. There's a lot of regulation, there's a lot of compliance, and probably there's a lot of investment in technology to make sure you're sort of at the forefront of transacting this business, very efficiently. And I guess for the group, again, dealing with scale and I guess dealing with someone who's quite dominant in the market is probably key for both parties.
And is this a significant move for you into the premium space?
Look, we've always had exposure right across the industry, right across the motor vehicle area, but again, probably not so much at that sort of premium end. We've got a number of brands that we've been associated with from a wholesale and a retail point of view for a long, long time. And we don't generally put UDC's name out there in front of those brands. They'll be branded with the distributor's name. And that extends not only to motor vehicles, but motorbikes, agricultural equipment, and some of the truck brands as well.
Will European Financial Services Limited still exist, or will that be encompassed under UDC now?
No, it'll be encompassed under UDC, and again, the brands will have the distributor brand under the finance. It'll be processed, obviously, and pretty much transacted all through UDC. And dealers will be very familiar with our online platform, UDC Live, where the business is transacted from the dealership point of view back to UDC.
This investment is quite significant. The Overseas Investment Office puts the asset value at $213 million. Is that what you paid?
No, it's not what we paid, but I guess to put that sort of size into, it is a significant transaction. I mean, it's the first transaction that we've done in almost 30 years. UDC sort of growing organically, I guess, as opposed to making any purchases. We've got a loan receivable book of just on $4 billion. So yes, the $200 million sort of figure is significant, but I guess it just puts a light on the size of our business that it is currently.
Yeah, and you had the lion's share of this market now?
Yeah, we're pretty much one of the major players in the market. And, it's been a significant effort of what we've done. As I say, we've got sort of our $4 billion, almost half of it is sort of transacted or exposed to the motor vehicle market in this way. But then, of course, we're very well known for our wheels and tracks and aircraft, yellow goods, craneage, trucks. So, it's significant. It's sort of half of what we do, but equally, there's plenty of other business that UDC does across New Zealand.
Okay. Are you eyeing any other acquisitions now you've broken away from ANZ?
Yeah, it's interesting. We are definitely charged with growth, and there are some sort of markets that are sort of attractive to us. So yeah, we will certainly be on the lookout for the right propositions. And so it's probably not a bad time at the moment. There's a lot of investment required to run these types of businesses. You've got to have scale. We have quite a large business now. We've got sort of 270 odd staff. It was only sort of 2 years ago we were running just around 200. So we're making significant investment. The right opportunities that come along, we will certainly take a look at them.
What areas are you looking to tap into?
I think, look, we always say, stick to our knitting. Asset finance. I guess we're seeing a big move from traditional financing to more subscription type models or rental type models for mobility finance. Certainly a focus on clean tech and new technologies. We are supporting those very well already, but as those markets sort of change and evolve with products, we will move with those. I don't think we'll be moving dramatically outside of our core business of asset finance.
How have you found the current economic climate with high inflation and a slowing economy?
Yes, it's been interesting watching the market change. I guess if you look at, so particularly our commercial business, right the way through COVID, we were essentially funding essential services, trucks, equipment, forestry equipment, stuff that sort of had to keep moving to keep the production lines going. So we didn't see too much of a slowdown there. Obviously, a little bit of tourism had some impact. And when it came to motor vehicles, again, we saw this massive sort of burst of activity of people buying stock. Certainly 12 months ago, when we sort of came out of lockdown, and I guess the challenge still is and has been around getting stock and availability of stock. So from I guess the asset classes we're in, the growth has actually been quite good.
Okay, and what's the outlook?
I think the outlook is careful. Again, our sort of essential commercial business is going along quite well, and I don't think we'll see too much slowdown in a lot of that. I think as consumers start seeing, the disposable income sort of get chipped away by, inflationary costs, certainly interest rate costs, disposable income, food and transportation costs, I guess sometimes there's a bit more choice for people. So we may see an easing there. Just to what degree we see that easing, we're just not too sure.
Wayne Percival, thanks for your time.